Hey, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. Today is Wednesday, July 12th, 2023, and this is Blockhead Traders Weekly. In this week's episode, we're joined by fellow Blockhead trader Viper XL 007. And in this week's episode, we are going to get out the hard hats, as Viper likes to say. We've been talking about some various experimental things that Viper's been exploring on, and we are going to visit two of those experiments this evening. The first one is all about getting back your initial money when you try something new. To play with the house's money. This is all about Viper's experiment in running a market maker bot and how he has been harvesting various rewards and trying to collect the profits of that, skim them off the top, and I believe he has recently achieved the on the house's money status. Then after that, we are going to dip into a tale of 3 Bitcoin trades. So in a recent episode, Viper and I kind of talked about various ETFs and the Bitcoin ETF world, and Viper decided that he was going to do an interesting experiment in that episode about taking 3 various trades on Bitcoin to see how they would pan out of equal sizes. And so we're going to see how that's going because Viper did open each and every one of those trades. But before we get to all that content, I would like to give a shout out to our Discord, link in the description below. You can hop in there, say hello to myself, Viper, some of the other Blockhead traders. You can also go to thetagang.com/sprocket888, where you can see each and every one of my equity trades, the good, the bad, and the ugly. Lastly, you can pick up this in an audio format wherever you get your podcasts. If you can't find it there, let us know and we will get it there. But Viper, let's hop to this week's episode with the hard hat. I don't actually have my hard hat with me this evening, so hopefully I can put a virtual one on here. And let's talk about this market maker bot because I'm kind of interested in it. I've kind of watched you from the sidelines saying, hey, this is kind of cool, but also it seems like a lot of work. And I'm kind of lazy, so I'm letting you kind of test the waters. And I know that you mentioned you did reach an interesting milestone, which, first of all, when you told me that, I said, it's been that long already? Because I didn't think it's been that long. And in the grand scheme of things, if you really kind of recouped your initial investment at this point, that's a pretty fast turnaround to recover an entire investment that you put in there. But, you know, I'll turn it over to you. Talk us through this. What's going on?
Yeah, in the spirit of the hard hat situation that we have going on here, there's a few things I really want to drive home crystal clear up front, and I'm going to say them over and over again as we go through this, and that is the purpose of the hard hat. This is experimental, and the last thing I want to do is paint this picture of like, yeah, you just show up and you do this thing and profits abound, because there's a lot of nuance to getting into this. So yes, that's the disclaimer that's going to come up more regularly as we continue to go through. But basically, like you said, I have been running this market maker bot on a particular DEX, which we've talked about before in the crypto world, which is decentralized exchange. This particular DEX is running with all the conveniences and modern user experience of a CLOB, a central limit order book. And so therefore, they do have a professional market maker that helps fill this thing out, but it's decentralized. And so anybody can participate that wants to. So I happen to find a market maker bot open source project, which targets all sorts of different markets. And they happen to support this particular market. So went down that route and set up the bot. And the long story short, cutting to the spoiler alert, is I've been participating on the DEX for 4 months and running the bot full time for 2 months. And as of this last payout period of the rewards token, I had earned in the rewards token, I had earned equivalent to the initial investment that I made at the start of it. So 100% ROI. I hesitated. I was like, well, if I take some of this and then then compound the rest back in, then the rewards will be great. And I was like, no, stop. This is this is a ridiculous win. And like you said, it felt really good to just take the profit, take the money that I had put in there, take it out. I completely off-ramped it, completely out of blockchain. And now the bot continues to run, and I couldn't care less what happens because all that money is pure house money at this point, like you said. So and it doesn't have to be some convoluted setup like this. Like that's the lesson there is no matter what you're doing, and especially if you're getting into trading, getting into getting into equities, getting into options, getting into anything, do not ever be afraid to just take the wins and slice off a piece of the pie back to your account where you funded it from, or whatever you got to do to lock in those gains. And that's a key distinction there, locking it in, which is not saying, okay, I made $100 here, so now I'm going to take that and go open up this position over there, and I made $100. No, you made it, but you didn't lock it in. So that was my personal goal here, was to lock in quite the win, and I'm pretty happy about that. Oh, and the other big nuance is this rewards token. I mean, this wasn't performance of the bot by any means, as we'll see. This was the performance of the rewards token. The rewards token has doubled in price since I started, so that was a big part of it too. And that was also a big part of why I really, really wanted to lock this in, because there's just so much uncertainty in any market, but especially this market, that when you have those wins pushing in your favor and at your back, don't get complacent and just lock it in.
Yeah, that's actually, it's a lot harder to do than it is to say. And that's something that I have struggled with when I get into these more experimental things. I know you go back a year plus and you'll find lots of episodes about chicken and chicken farming. And that's a NFT thing that I started kind of putting funds into. And I have not actually pulled back all of my funds out of that from rewards and stuff like that. Mostly because I was like, oh, but if I leave it in here, it'll keep going. Or, oh, if I do that, it will climb. And in most cases, it hasn't. I won't say that I'm super sad about it, but I think that discipline, particularly when you're in something that is extremely experimental, is very good to be able to say, okay, I'm going to recoup this dollar amount. Viper, I'm assuming you were able to recoup your money all based in USD. So when you say you got your investment back, you're not talking about tokens or things like that. It's all based in USD, right?
Yeah, that's correct.
Yeah. And I mean, there's a time and place for compounding things. In my, personal objectives and one of my trading accounts is to really build this pile of funds that I want to, at some point, once the fund reaches a certain target amount, and I have that target amount that I'm working towards, that's when I'm start pulling the profits off of that and essentially kind of supplementing monthly income in that. And it's kind of in preparation of reaching a retirement age and trying to get this extra income stream. And so for me, in that world, my strategy is to take the profits from my plays and my strategies that I have there and leave them in the account and kind of turn them around and rinse and repeat and let them compound. But absolutely what Viper said, if you're at a point where you're like, hey, let's go take this and, put it back to pay down some extra debt, or to say, hey, you know what, let's go out and grab a nice dinner tonight because there's this, and you want to pull those profits to realize that. Definitely don't forget to pull that out and enjoy the fruits of your labor.
Absolutely. So let's get into a little bit of the situation on this market maker, because I want to really call out, like I said, the nuance of what happened here. This is just a snapshot of the last 2 months, so this isn't the full range of the bot running. And this net P&L is not actually accurate because it's not factoring in fees and transaction fees of the trade. So what's important here to note is of all these trades that are in this particular window here, you can see the average buy price was $12.83 and the average sell price was $12.82. So right there is enough reason to be like, I mean, the bot wasn't trading profitably per se. It was more of a situation of capitalizing on how the rewards are distributed, because that the protocol as an order book is highly interested and incentivized to reward orders sitting on the book, because that's what makes them liquid. And the biggest lesson that I learned in this activity, you can see on the chart here, all these red and green triangles are just trades that happen, sells and buys. The big thing that really messed up my initial capital, and this was another big reason why I only briefly hesitated on whether or not to just take the big W versus taking a sliver of the W, is this big red candle here. This was a huge drop on, this is AVAX, is the underlying that was being traded by the bot. And there was this huge candle where we went from $14 this is a 4-hour candle, so it actually went all the way down off the screen here down to $10. It was a big drop. I think we might have talked about it on a previous episode, but this candle alone completely wrecked my initial capital in the bot, and that was just purely a mechanics of how the bot functions. So this is not a smart bot by any means. There's no AI algorithm behind it. It's just high frequency trading of, I can tweak and tune the parameters to say hold an order in this space, this far from the strike, above and below, for a buy or a sell, and after X period of time, go ahead and clear those orders and let's refresh them and recalculate the percentage from the current strike. And so on this particular candle, it dropped so fast that basically I had buy orders, as you'd expect, within, they were laddered slightly from 0.2% to the max was like 1% or 1.5% away from the strike. And so I was, at the time of the dip, I was holding some tokens, and then I also had those buy orders, and then it dropped. This was a solid like 40% drop, 30 or 40%. So it cleared through going down, speeding bullet, picked up my buy orders. So now I'm in free fall, and I'm just holding a bag of these tokens that are in free fall. And this happened overnight, and the bot was just running. So nothing that I could really do about it other than lose 40% of my value in this particular account. So I kind of wanted to just make sure I called that out because, as sweet and cherry roses as it sounded, like that was a big thing to stomach of, that was, at that point, I maybe had 30% of my initial capital earned back in rewards. And so I was like, man, like that hurts. Like that's going to take a while to get that back. And the bot hasn't really traded it back, as you can see, like the average buy and sell price. So once the rewards came in though, and it was where it was, I was like, you know what, that covers it, take that initial capital, get it out. And now going forward, future rewards, I'll start to maybe backfill some of that missing capital, back up to the initial position size. But I definitely wanted to call out, like I said, this isn't about like, oh, this is so easy, you could just come in here and get rich. Like there's a lot you have to stomach in this space, and not just this space, just in investing in general, like that big drop, and not panic, and understand the mechanics of what you're doing, understand the mechanics of how you're planning to earn your profits. And so that was all going through my head in this scenario where I was like, okay, I'm not here to make this bot profitable. The bot trading is not where I'm earning my profits, et cetera, et cetera. And I played through all of that logic because I understood the mechanics of what was happening here. So And then lastly, the other thing, like I said, that I really, really want to make sure I call out here is the other reason this happened so quickly is the price of the rewards token. So this a lot token here is the name of the rewards token. I started somewhere around back here, and you can see that the token price actually had gone down since I started, and that was the path I fully expected. I mean, that's just how, when you reward somebody for doing something in a completely new form of currency like this a lot token, like it basically becomes a dump token where it's like, hey, here's your rewards, and then everybody that got their rewards is like, great, I want to sell them. So it came down quite a bit from when I started, but I fully expected that, and I was anticipating, I was projecting maybe like a 9 to 10 month period, maybe even a year before getting break even on that initial capital. But as you can see on the chart here, there was a very solid rebound up here of the token, and the token was actually up 100% from that low there. So again, I can speculate all day long about why that's the case, etc., but none of it matters. The fact was I was holding a bag of this rewards token that was now worth twice as much as I expected. All the stars aligned, lock it in, let's move on, just because it is so speculative, it is so experimental and hard hat. So hopefully that paints the picture of it can be profitable to be experimental, but you really, really need to understand what is happening, what are you trading, what are the mechanics, where's your profit coming from, all that stuff. This wasn't just a show up and do it and make money kind of thing.
And I think you probably were probably prepared for a total wipeout, I would guess, when you're going into this speculation.
Yeah, for sure. I mean, this is a subset. So yeah, we've talked before about different capital allocations in our portfolios or things like that. So this bag that I was using in this initial investment was a subset of my already subsetted crypto exposure. So yeah, I mean, that's always important to remember as well, that going into this, I was okay with total wipeout. I also, in part, wasn't expecting it, or it was lower on my probability list just because of, again, those mechanics, understanding the protocol, understanding what was initially traded. So the bot, like I said, is trading that AVAX and USDC pair, which are two tokens that I'm very familiar with and very okay having, be traded back and forth. So those two, went into it with the expectation of this could all disappear tomorrow, but also with a slightly higher level of comfortability just because of my exposure with those two tokens specifically.
Yep. No, that's a good call out on that front. And, that kind of circles back to the thing we always say about position sizing. Position sizing is you play the position in investment that you can afford to lose and are comfortable with losing, that still lets you sleep at night. So,
yep. And going forward, I mean, I'm kind of excited because I still don't think I'm, and this is not really trading related, it's just nerd related, that, I mean, this is a pretty cool trading bot. There's a lot of knobs and strategies and ways to use it. So, going forward and keeping this in mind of like, well, these rewards aren't going to be this good forever and, all that kind of stuff. Like, it would be nice to tweak and tune this thing to be a little more profitable. So I'm pretty excited on that. That's another thing that's keeping me involved in this exercise is, not just the financial aspect, but just messing around with this bot and trying to figure out if I could actually strike a strategy that's, somewhat profitable. Then all of a sudden things get real interesting, real fast.
So speaking of other interesting things and experimental plays, what is this tale of three Bitcoin? I remember we talked about Bitcoin ETFs and the difference between futures Bitcoin ETFs, spot price ETFs, which don't exist in the US, and just kind of trading straight Bitcoin. The futures ETF are basically taken up by trading in futures. So you pool all your money. Remember, ETF is that exchange traded fund where you pool all your money to a particular strategy. Some of those are buying and selling futures ETFs. Another one, which is the one that's catching a lot of the news, is people are trying to bring spot ETFs onto the exchange. The difference there is those things will buy and sell directly the actual underlying of Bitcoin, whereas futures just are Bitcoin futures. And then, of course, you can always go in and just buy Bitcoin on a exchange, centralized or decentralized in crypto world, put it in a wallet and hold it. So recap the trade, the three types. There was three. I don't remember the specifics of which of them. I think one of them was a futures ETF, I think. One was actual Bitcoin. But what was the third?
Yeah, so the idea here was, I don't know, just to be a little, I don't know, not cheeky, but just kind of showcase, I don't know, I guess we'll see at the end of this exactly what is being showcased. But the goal was really just to kind of, in theory, whether or not theory pans out or not, but in theory, just showcase different ways to trade the same exact underlying. And obviously that can be true in many different ways. Like that can be true in pure equities world. We talk about it all the time with options and shares, straight shares trading and all that kind of stuff. So initially my plan was just to do 2 Bitcoin trades. One was just a pure, we'll call it a naked spot buy of just pick up. And in this case, it was going to be $100 for each trade. So case one, pretty simple. Let's just pick up $100 of Bitcoin and hold it for a little while here. And case two was really the initial focus, which was the futures ETF, the 2x leveraged futures ETF that anybody can buy right now on any traded exchange, publicly traded under the BITX ticker. And so initially I was like, I just want to compare, is this a thing for, because we mentioned exposure to Bitcoin at a 2x leverage in price move, good or bad. So I was like, well, that was the initial thought of like, I'll throw these 2 trades on. We'll let it go for 2 or 3 months. We'll come back and we'll be like, did it hold up? Did the 2x leverage ETF do its job? Did the fund manager do their job? Which again, they're not claiming to do that 2x over a 2-3 month period. They clearly state, as we went through and showed in the prospectus, they clearly stated this is a 1-day time frame. Every single day they expect to perform that way. But nonetheless, I was like, it'll be interesting. Let's hold that open. And then I got thinking on the third perspective, where I was like, this world of decentralized finance and all these different vehicles that kind of open up in the current world of decentralized finance, which again, the hard hat is firmly on our heads. And also that $100 size is not a coincidence. That is real time. You are witnessing position sizing to risk mitigation and things like that, because there's just so many unknowns when you start to get into these decentralized protocols, decentralized finance protocols. And but at the same time, there's an opportunity to show some interesting data when we get to the end of this thing and see what comes of that. And maybe that will make some more sense here in a minute. So let me walk through where we're at and what exactly was set up. So the initial spot buy was here. You can see on the pink line here, it's a cost basis of $30,413. I think it was $415, but nonetheless, Bitcoin, I purchased all Bitcoin for this at that same exact time. And you can see we're down on our position currently. Let's see how much. It's about 0.25%, almost 0.5%. And I didn't chart this one. I didn't chart the BITX out, but here's the BITX chart. You can see it's obviously coming down as well. So that's the setup of where we're at now. In the to spend a little bit of time on the decentralized finance piece of it, again, this is not to call out any particular protocol. This is not in support of this particular protocol. Full disclosure, this protocol I ended up choosing is fairly new, which should always be a concerning red flag of significant position sizing mitigation, risk mitigation. So this is in no way an endorsement of this protocol, but it had the most interesting potential for this experiment. So this particular protocol, what they do is, we can, if people are interested, we can dive deeper into the actual specifics of this. But it's basically a derivatives product. It's a derivative product of, obviously of Bitcoin, but of a yield-bearing asset. And basically, the way that they kind of structure this yield, the particular yield-bearing asset that they use, obviously, as the name implies, it produces a yield just for holding it, and that yield is based on fees collected on a particular leveraged perps exchange. And so it's I just say that to be that it's a real yield based on actual fees collected from users, from leverage trading, from borrowing, and all that kind of stuff. So this particular protocol that I'm using takes this yield-bearing asset, and they call these splits tranches, and they basically create two tranches. They have a fixed tranche, which is a fixed interest rate, and then they have a variable tranche where you can pick which one you want. You could choose the variable tranche, which has the potential to pay a much higher interest rate on your investment, but it is much riskier. Because it's variable and it's fully dependent upon the yield-bearing performance of the underlying. So in a fancy little graphic here, basically the top flow here is the yield-bearing position, which is a sustainable source of yield. And you can see that comes in. Now, the first thing they do with that yield that was generated is they use that to pay the fixed tranche investors. And then the capital that was invested by the fixed tranche investors, they use that to then go to the variable tranche as residual, and that's what pays for that. So I think it was described a little bit more here in one other. Yeah. So example calculation. So they have a vault where this investment goes. So this does also involve a time lock of my investment, which again, position sizing. The money goes into this vault, and then that's where they split it up and do this handling of the yield-bearing asset. And then essentially, whatever it ends up yielding this is how they kind of split it out. They do 2x leverage for the variable interest rate. And so if the underlying asset did 15%, when they did that on 2x leverage, then you would have a 30% return. 10 of that goes to the fixed tranche, and 20 of that goes to those who invested in the variable. And so this is just showing that math across, 15, 25, 35% performance. And again, I'm skipping over a lot of very, very important details, but this is also speaking to that digging into the mechanics and understanding the underlying. So that's why I say I'm happy to dig in deeper to this particular yield-bearing asset that's underneath all of this. I think it's a very interesting thing, but it's also a bit beyond the scope of what we're going for here. So at a high level, this is what this is the meat and potatoes of the particular play, which you can see this is a lockup period from July 14th. So it'll be closing by the window to enter is going to be closed by the time this airs, which kind of makes me feel better. So nobody goes jumping into this thing. And it'll be locked up for 2 months, June, July, August. Yeah, about just under 2 months to September 8th. And there's two halves of this. There's a Bitcoin half, which you can put in, and the fixed return side is on Bitcoin. That APR is going to be 10%. And on the variable side, if you wanted to deposit USDC, That is the side with the variable return, and currently projected to be 12.38%. But from what I've seen on, if we look at one of their other pools, which is just a USDC vault, and look at historical performance, we can see that is very variable. So, but it's always fairly decent. There's an 8.59 here, but other than that, 50, 32, 50, 26, a couple really big lockup periods here. They're doing 1 month on this other vault, 182, 180. And again, that variability is 100% dictated by the amount of liquidations that happen on this leveraged trading platform. So that's why it's so widely variable, because, in this 180, 182, that was a moment, if we go back and look at charts in June, early June, if there's large price swings in that period, there's going to be a lot of liquidations on the leverage trading platform, which then yields a bunch of fees, et cetera, et cetera. So that's why that is variable. So we'll see how this pans out. But what I think is going to be most interesting, if we go back to my chart here of the Bitcoin price, position 1, obviously it's just holding pure Bitcoin. Position 2 is holding futures Bitcoin. Now, in both of these positions, the amount of Bitcoin is not changing. And so they're pretty much should track together with whatever happens to the price. So now where I think this might get really interesting is in the case of the vault, I'm earning that 10% in paid out Bitcoin. And so it's possible that, let's say that this 0.25%, 0.5% is 2 months from now, where the price is when this thing finishes. All of a sudden, holding straight and holding the futures position are at a loss, and the price is still the same for the Bitcoin that I retrieve out of the vault, but I've earned a Bitcoin-based interest on that position. And so it could be in profit because of the growth of the underlying asset itself. So we'll see how that plays out, of course. And actually, I when I went to the vault, I decided to really complicate it, and I split my $100, and I put half of it on the fixed APR side and half of it on the USDC variable side, just to really kind of see what happens here. But I'll probably need to break that down a little more better in 2 months when we get the results. But that's the gist of it. I don't know. Is that just hodgepodge magic and voodoo, or we kind of follow along with that?
Well, I followed you. I'm curious, the entry of Bitcoin. So when you went to go get the Bitcoin to source into the vault, was that part of the same purchase when you were holding your raw Bitcoin?
Yeah. So everything has the same cost basis here. Basically bought $300 worth, and then just kind of divided it up 3 ways and kind of sent them. Well, I didn't send it to my equities account, but bought $200 worth of Bitcoin, and at the same time issued the order for the BITX position.
Okay, so basically, you theoretically within a few minutes of all the price action on the stuff is effectively the same entry point for all 3 of those.
Yeah, and there is. I'll have to consider the fact that BITX is not a fractional shares thing, so it actually wasn't a clean $100. It was 6 shares, I think, so it was like $90. But I'll try to figure out how to factor that in at the end of the day. Right now, it doesn't matter. Right now, the performance of it is actually, even though the initial investment was less, it's pegging 2x the performance of the underlying Bitcoin. But it's only been a week, so we'll see.
I think it'll be interesting. I'm honestly, I'm a little more interested in the difference between the ETF, the 2x leverage ETF, and holding the Bitcoin.
Yeah,
because I equate the vault thing to really be like your bank account, right? If you take cash and you put it in a bank account and you earn interest, then the cash still has the same value as when you put it in, or at least whatever the present value is when you take it out, right? Cash doesn't go up or down. Well, it does, but what I mean is the value of that is really unchanged, and your alpha is that interest rate. And I think
Right.
that's effectively going to be the difference between your holding the Bitcoin and putting the Bitcoin and earning some interest on it. But what I'm really kind of curious on is how that 2x leverage kind of pans out on things.
Yeah.
What,
Yeah, and I think that was also part of why I decided kind of last minute to split the vault position into half Bitcoin and half the USDC side, because effectively that USDC side is being leveraged on my behalf, and so kind of like you said, like, okay, I threw it in there on the fixed side. Okay, it's 10%. We know what's going to happen here. It's going to be 10% more when it comes out to the single position. That's how interest works. So I kind of wanted to spice it up a little bit by throwing some of it on the leverage side. And so perhaps it'll kind of showcase a little bit of that different levels of leverage. And it could be that the leverage doesn't pan out, and on the vault, it actually underperforms the 2x futures leverage, but we'll see. But yeah, I think the 2x ETF is probably going to be the most interesting and most accessible for everybody. Cause like I said, that vault is certainly not something we're advocating, and it's just my own familiarity and knowledge of digging into these protocols and where's the money coming from and all that kind of stuff. So, but it should be interesting nonetheless.
I think a other aspect which we're not covering here that is a little bit intriguing to me, maybe it's a sequel to this experiment, is running the similar thing, but while your assets are holed up in that vault, what happens if you try to swing trade your Bitcoin and swing trade that ETF, right? Because just sitting there holding the Bitcoin, yeah, that's like putting the cash in your mattress. When you go open up your mattress, it's going to be the same. But if you try to capitalize on those swing movements, to me, that's more along the lines of, hey, what happens between active investing and passive investing?
Yeah.
Can you really beat the market or beat the returns of something else? And a lot of people say, hey, it's not worth the time for me to try to actively trade these, so I'm going to put money in this particular ETF, which is going to swing trade or do something like that. And so it would be kind of interesting for that static Bitcoin value or something to that effect if you tried to swing trade it while your vault was cranking away in the background.
Yeah. Yeah, I agree. There's a lot of ways to spice this up, and it's possible. I do not like the long-term hold, even if it's $100 position. Like, I look at the charts enough, I read the charts and practice reading the charts enough that it's possible. We might just mix it up, and somewhere along the way that might end up happening to that static Bitcoin, because I don't like money just sitting there not doing anything. So we'll see. And I don't think it'll be too much of a change of the experiment, just because we know what happens when it sits there. It's marked on the chart. So that's the cost basis. If I do swing trade it or whatever, we still have the static control subject in theory. So yeah.
It'll be really embarrassing if the little vault beats your swing trading, I think.
No, I don't. I'm kind of. I think the vault, because of the variable side. If Bitcoin's going into a period of volatility, that $50 that I split over into the variable side, that could get pretty spicy. So I don't know that I'd be too embarrassed. But I also don't claim to be a fantastic trader.
Yeah, but I think that just kind of goes to that interesting thing where, you might be like, oh, look, having money just sit somewhere might not be that bad, where
Yeah. Yeah, that's
you don't
true.
like locking it up for two months, but wow, look at the results. So yeah, we'll see what happens.
Yeah. And
Maybe
that's,
maybe this place will get like compromised with some sort of flaw, and you'll lose it all. Then at least you'll have your other Bitcoin.
yep. That is a very real possibility. I mean, you just took investment money and locked it for 2 months into a contract. Stranger things have happened. So we could be back to 2 trades at the end of this, but we do have a defined timeline thanks to the vault. So if nothing else, it gave us a clear timeline for this little exercise. September 8th is when this will conclude.
Man, we're gonna have to remember about that. I'll probably forget about it. And September will come around, and you'll be like, "Hey, we're gonna talk about this. My vault is opening up," and or maybe it just floats away at sea. I don't know.
Yeah, we hope it opens up. Maybe September 8th, they'll be like, well, we got to do an episode where the vault never opened and my money's gone.
Yeah, did you write down the combination? Did you remember to write it down somewhere?
No, I trust somebody else with all that. It's crypto. It's fully trusted.
Oh yeah. Nothing can go wrong there, I'm sure. Well, that brings us to the end of this week's episode. A little visit down there on Experimental Alley on a couple of things that Viper's got going on. I hope you kind of enjoyed it. Dig into some of that stuff. Like I said, if you get some comments or feedback that you want us to dig into some of those other vault protocols and what's actually happening there under the hood, or happy to do it. Really understanding what you're trading is one of the core fundamental things that both Viper and myself believe very, very strongly in when it comes to kind of investing your money is, don't just take something at face value. Pop up, open the hood, take a look under there, try to figure out what makes the machine go, and really understand what it is you're actually trading. Where does the profits come from? What are the mechanics of it? It really, really, really will make a difference. It might be boring. You might, not be as fancy or whatever with the little, oh, I did this, push this button and I made millions. But it really kind of helps grasp a lot of those concepts. And aside from that, next week is really the kickoff to earnings week, and or earnings season, let's say, which will go for multiple weeks. And I love earnings season because I always take a little chunk of my capital and I look for a couple of juicy premium selling plays or something to that effect to throw out there. And so I'm really kind of looking forward to some of the trades coming up. I know next week, one of the ones I'm looking at, and I'll say it now because by the time this airs, you'll at least, if you happen to be one of the first ones to watch it when it comes out next week, Netflix is out next week. And from a premium selling play, that is looking pretty juicy from a volatility standpoint. And so that is the only one on my radar next week so far to play for earnings. But rest assured, I am quite confident in the coming weeks. We will definitely get another earnings episode out. I think that is one of the fun ways to kind of enter a trade. It's a little more coin flip. The odds aren't as much in your favor as some of the other trades that we like to put on or biases that we kind of tilt out there. But it is a lot of fun because you usually know within 24 hours how that's going to pan out. And so it's pretty exciting. Whether or not you're into earnings trades or something else, I hope you find something that excites you in the market and you experiment or experience good luck there. So have fun out there and remember, think outside the block.